watching The Big Question. I'm Tamanna Inamdar. The question we're taking up in today's show is, how can India weather the Trump storm? Now, defying speculation that his tariff threats were just that, empty threats or bluffs, US President Donald Trump has followed through on his words and gone ahead and imposed steep duty on the country's biggest trade partners and friends. Canada and Mexico have been slapped with 25% tariffs across product categories. For energy imports from Canada, a lower 10% tariff has been imposed. As far as China goes, a second round of 10% tariffs have been imposed, taking the total tariffs from the US to China up to 20%. Countries have swiftly responded, calling the move a dumb thing to do. And I'm quoting here, Justin Trudeau of Canada has imposed retaliatory tariffs of 25%. Trudeau says more tariffs will come into effect in 21 days. China has hit back with 10 to 15% tariffs and put 25 US firms under export and investment restrictions. Mexico has also vowed to impose counter tariffs by the end of the week. Now, tariff for tariff, in a sense, will just boost up prices. Tariffs are taxes that one country imposes on the import of goods from another country. Question is, what about India? As far as India is concerned, the clock is still ticking. Starting March 12th, Trump has promised to slap 25% tariffs on steel, aluminum imports, raising concerns for Indian steel producers facing intense competition and oversupply. A bigger concern is the reciprocal tariffs, which are set to come into effect from April 2nd, something which Trump doubled down once again in his maiden speech to a joint session of Congress. Listen in.
India charges us auto tariffs higher than 100%. China's average tariff on our products is twice what we charge them. And South Korea's average tariff is 4 times higher. Think of that, 4 times higher. And we give so much help militarily and in so many other ways to South Korea, but that's what happens. This is happening by friend and foe. This system is not fair to the United States and never was, and so on April 2nd, I wanted to make it April 1st, but I didn't want to be accused of April Fool's Day. That's not, just one day was cost us a lot of money. But we're going to do it in April. I'm a very superstitious person. April 2nd, reciprocal tariffs kick in. And whatever they tariff us, other countries, we will tariff them. That's reciprocal, back and forth. Whatever they tax us, we will tax them. If they do non-monetary tariffs to keep us out of their market, then we will do non-monetary barriers to keep them out of our market.
So we're in times when tariffs has become a verb. What they will tariff us, we will tariff them. Now, on our part, India has been trying to avert Trump's tariffs. Some preemptive moves have already come in. We've slashed custom duties on several products, motorcycles, luxury cars, some bourbon whiskey, but it still remains high when compared with the USA. For example, according to a White House fact sheet, the US charges an average 5% tariff on agricultural goods as opposed to India's 39%. Obviously, we don't want more agricultural goods from outside coming in. We have a huge population that is in agriculture. Even according to WTO data, that's the World Trade Organization, India's simple average tariff rate is 17% compared to about 3.3% for the US. On a trade-weighted basis, India's rate is about 12% versus 2.2% for the US. So if the United States imposes a uniform tariff, something which Donald Trump, the president, has said he wants to do again and again, India will have to bear the brunt of an additional 4.9% tariff, according to data by the Global Trade Research Initiative. It's a move that is bound to have large-scale implications for India. In fact, Union Minister Piyush Goyal is already in Washington negotiating terms of a trade deal and trying to strike a balance when it comes to reciprocal tariffs. With this, that is the big question. What can India really do to navigate the Trump tariff storm, and can we emerge unscathed? To speak on this, I am first joined by Dr. Ajit Ranade, noted economist. Dr. Ranade, First of all, it's such a pleasure to be speaking with you after so long and on a subject this important. I want to first set the context of why India has higher tariffs than the US, and some would argue a lot of countries. What is the reason we have higher tariffs?
Well, Tamanna, India indeed has our import tariffs are higher than ASEAN countries, higher than EU, and higher than most other developing countries, including Mexico. So even without the Trump threat of the reciprocal tariffs, we need to seriously look at our overall structure of import duties. And the big reforms in 1991 was to deregulate and also reduce import duties. Those days they were very high. But what has happened since 2015 is they have again drifted up. So in the last about 7-8 years, they have gone up by 4 to 5%. So the ambition of going eventually to the ASEAN levels, which is the levels of our peer countries, in fact, has got reversed in the last few years. So it is high time for us to look at this strategy. Why have we turned protectionist in the last 7 or 8 years? Perhaps one of the reasons was to nurture Make in India program, or as an added incentive to the production-linked incentives given to 14 sectors in manufacturing. But the modern reality is very complex because manufacturing consists of very complicated global value chains which straddle across national borders. So, many of our manufacturing sectors actually use imported components. So when you raise duties to ostensibly to protect your manufacturing, you're actually imposing a cost on the imported components that are necessary for manufacturing. For example, iPhone. We take great pride that India is going to be exporting $30 billion or $33 billion of smartphones, iPhones this year. But as you know, 80 to 90% of it consists of very high degree of import content. And if you have higher import duties on, that's going to increase the cost and decrease our competitiveness. So India had traditionally, since 91, started going down, and eventually we wanted to go down to ASEAN levels. But last 6 to 7 years, we have drifted up, and that is not a good sign. And I don't think it's justified on the basis of protecting Make in India.
Okay, so the idea, so that you've put it clearly, it's in line with our idea of Make in India. If you import less, you'll have to make more here, and you want to encourage domestic industry because that's how the jobs come, etc.
And Tamanna, remember, Make in India, as Prime Minister himself had said, many people have said, does not mean make only for India. Make in India, but make for the world. So you got to be competitive, you got to be efficient, and you got to have world standards. So no point in being, behind protective walls. So the idea of Make in India does not mean that you become less competitive than the rest of the world. So you should be open to competition and therefore lower tariffs.
Okay, so that's the base case of why tariffs should be lower. It should be more competitive. The world we are in, though, is moving towards higher and higher tariffs, with the US taking the lead. Now, what happens if reciprocal tariffs come in, and how can we avoid that kind of situation? Clearly, this will be a bad thing for us, isn't it, Dr. Ranade?
It would be a bad thing. It's not just bad thing for India, it's bad for the world, because this tit for tat strategy, if I may use another metaphor, not quite appropriate, an eye for an eye will just make the whole world blind, right? So this tit for tat mercantilist thinking is not appropriate for the 21st century. This was something we have seen in history, and it just ended up very badly. What happens is that the tit for tat tariffs, a reciprocal tariff escalation, not only increases the cost and the prices and it actually decreases volume of trade. And that is a double whammy. So in fact, that will hurt us very badly. In fact, here we are trying to sustain high economic growth of at least 8%, inclusive and sustainable. It is not possible if we don't also have export as a driver of growth. And to be exporting to the rest of the world, we need to have a world which is not acting on these mercantilist tendencies. And this is what Mr. Trump has started. And it seems, that big resounding applause he got in the Congress, Senate or Congress, is not a good sign, because this is going to hurt Americans as well. Remember that high import tariffs on goods imported into America will cause inflation to go up. Already there is, high inflation. And in fact, there is one theory that one of big factor leading to President Trump's victory over Biden was the inflation. And this is just going to worsen inflation. So Mr. Trump's idea is to compensate for the high import tariffs by decreasing income taxes to Americans. But that is not possible because the fiscal deficit just is so large already. They don't have room to cut taxes.
So
and
Dr. Ranade, very quickly, so what can we do? What can we do?
I think we have to aggressively start moving towards lower tariffs. We have to negotiate the average trade tariffs that Indians charge is 13%, as you said, 12%, and our manufactured goods face about 4%. So I think there is room for 7-8%. There is room to talk and reduce our import duties. We don't have anything greatly to fear by a flood of American manufactured goods imports into India. I don't think it's a big threat to Indian industry. So, when Trump said 100%, he was referring to Harley Davidson motorcycles. Surely, we shouldn't be threatened by Harley Davidson motorcycles, flooding India. By the way, on agriculture, the difference is that our duties are 39% and US is 4%. There, I think we have an opportunity because one of the major exports of the US is corn, maize. If it comes into India, already we are diverting to ethanol production, and which is causing high cost to the poultry industry. So maize coming into India at lower duties may not be a bad thing. And cotton is something we need to, calibrate. We can lower duties, but we can also impose some quotas. No discussion has happened about quotas. So we can say we will allow you low import duties for American goods to come into India, both agriculture and non-agriculture, but we will also agree on quotas. And that's what the BTA, the bilateral trade agreement details will be in that.
So that's a wait and watch. Thank you so much for your time, Dr. Ranade. And we hope to have you back when we have some clarity on what we are agreeing to and what those tariffs really pan out for. So noted economist there on what India needs to do and find the best way around this. But I'm continuing the conversation because there's so many angles to this story. Markets, not just in India, but the world over, have been roiling ahead of these tariff wars. Abhay Agarwal, Managing Director of Piper Serica Advisors, joining me now. I'm also speaking with Manpreet Gill, CIO of Africa, Middle East and Europe for Standard Chartered. Welcome to both of you and thank you so much for joining in on the conversation. Mr. Gill, let me come to you first. Is there still some hope out there that Trump won't go through? I mean, we've been speaking to people, and the fact that their Commerce Secretary has in an interview said that there's still some negotiations on. We know Donald Trump will be speaking with Justin Trudeau. The Mexican president has held off till Sunday. She's waiting for some kind of a negotiation. Is this not yet a done deal in terms of the first set of tariffs and counter tariffs, or are we hoping for too much?
Well, morning. I think calling it a done deal is difficult because even if this is part of a negotiation, it's not credible unless it's seen as a permanent sort of imposition of tariffs. But I think a large part of the market, including us, would say, look, there are signs that at least part of this is aimed at reaching some sort of negotiated settlement that leads to a very different outcome for the US than where we are today. And that's, I think, why we're seeing the reaction from Canada and Mexico and indeed elsewhere. I think what we should do is, of course, not expect this to be a quick solution. Clearly, we know what the timelines are. We know there's a trade report and potential imposition of broader tariffs coming through in April. That by itself should not come as a surprise to markets. But when we sort of model, different scenarios of what the impact on global growth and inflation is, how long these stay in place is also an equally important question. So we know trade deals are not easy. And, we obviously don't have a tremendous insight into how quickly, leaders on both sides want to reach some sort of settlement. But I'd interpret it as a positive sign that some form of negotiations, are in place, because the quicker we get to some sort of solution and understanding of what the steady state looks beyond this escalatory cycle, I think the quicker markets will be able to, factor that in and move on to looking at what future earnings look like.
But, I'm just wondering whether we've seen any of these negotiations ending with Trump stepping down from his position or not. And I'll give you an example, and I'll come to Abhay Agarwal on that. The conversation with Zelensky in the White House a few days ago, difficult and painful to watch, really, with two world leaders talking like this. Today you're hearing Zelensky saying, okay, I want to make this right, let's come back and talk. So it's Trump pushing down, and so far it's the other side that comes back to the table to sign off on what Trump wants, or at least that's how they're presenting it. How does that work out in our context? Abhay Agarwal, let me take that question to you.
Yeah, hi, good morning, Tamanna. So I think from our perspective, in this whole global trade war, that tariff war that we have been caught up in, I think what is very important is for us to understand that India is still a very small part of the global trade system. And I think on a positive basis, what we have to look at is that how do opportunities emerge for us? So I think there is one recognition that the status quo that we have got used to cannot continue. We cannot take it for granted. So it is very important that as a growing economy, we have to secure our own supply chains. We cannot depend or cannot take it for granted that supply chains for basic stuff will always be available. So I think Make in India becomes even more imperative. I would expect to see from the government a lot of focus on Make in India now. It's a wake-up call. I hope it is seen as that. Secondly, from the import perspective, I think we have been importing a lot of stuff that we can make in India, cheap electronics, semiconductors, APIs.
It will take time. It will take time, and what we need to do perhaps is in the other. Are you saying we should double down on Make in India and say, okay, we don't want to import your stuff. You can impose whatever tariffs you want? Is that the approach?
I think that is the because the global tariffs, I think even from the US perspective, Tamanna, is an acknowledgement that they are not competitive manufacturers of stuff that they are importing. I mean, that the tariff amount, 10%, 20%, 25%, is basically a cost equalization. So it says that, look, I'm not competitive. You are a better, more competitive manufacturer, China, Canada, Mexico. So I'm going to now penalize you for your competitiveness. And this is completely opposite of what we were taught by US economists, that global trade is a win-win and it's not a win-lose. So the needle has swung on the other side. I don't think it will stay there for long. I think a lot of posturing is going into it right now to correct some of the benefits that some countries are accruing. But right now there is collateral damage. My own expectation, Tamanna, is that all this will die down by mid-April at best. I think US will realize that they are causing a lot of damage to their own economy with inflation going up, bond yields going up, which is not something that they want, a very strong US dollar. So I think a lot of it will tame down. We're seeing early signs of that already over the last couple of days. If you see US market action across US bond yields, US dollar itself correcting, and the US markets correcting. So I think people will start looking beyond these tariff threats right now, and till something is done, I think the market mood will swing to, look, till something is done, let's not worry about it, and let's see where the opportunities are. Tamanna, frankly, that's my view right now.
This is so interesting when you say till something has done, because first, it was, he's just talking about it, he doesn't mean it. Then he gave a date, and on that date, he said, now I'm starting it. Now, he's still starting it. He's done it, and retaliatory tariffs are coming in. I'm just wondering what else we're waiting for. Manpreet Gill, let me come to you. Just this question of, and Abhay is absolutely right. Markets are saying, let's wait and watch till something is done. What is that something that needs to be done to make people understand that he is serious about tariff threats? He wants to increase the tariffs that America imposes on other countries. Make in America is a big issue for him.
Mm-hmm. No, absolutely. And I think it comes back to the point that even if this is part of a negotiating tactic, the threat has to be credible. There can be no sort of further step. These have to, from an American point of view, these would have to kick off and stay in place unless and until some other sort of, in order to really successfully trigger that negotiation. But I think it comes back to, the same point that I think it depends how long these stay in place. That's going to be an important factor. The other factor, maybe we haven't discussed, and Abhay alluded to this, is, the market reaction. Because the fact that tariffs are kicking off, the fact that they're negative for growth and inflation, that's not a complete surprise to markets. But if we start to see this escalatory cycle continue and potentially extend, at some point markets are likely to worry. And the dollar is unlikely to get a lot weaker, which arguably is something policymakers in the US are not completely ignoring. So we know from past experience that policymakers do pay attention to the market reaction. So there is that sort of natural buffer. Hopefully we don't have to test that to its fullest extreme. But at the end of the day, what we're learning through at least the early stages is that, yes, I mean, that Trump and his administration are laying out these tariff policies, but clearly there are efforts to have some negotiation even as the retaliation comes through.
Okay.
How quickly, how soon is going to be important.
Okay, so let me ask a question from the Indian perspective, because that's the core question we're asking on the show, right? What can India do to weather the storm? And let me come to you first, Manpreet. Frankly, if a few more Harley Davidsons come into the country, it's fine. Let the Teslas also come in, let them compete with the others, that's okay. But beyond a point, is this a relatively easy negotiation for us because we started off with such higher tariffs? How do you see this panning out?
But I think the number of ways it could, right? I mean, like you said, I think the starting point is much higher tariffs. The starting point is potentially a very different geopolitical context compared to perhaps the example you cited with Zelensky. So I think, look, is there room for a negotiated settlement? Chances are there are. I think the question is, where the give and take happens and what sort of equilibrium we ultimately settle at. Every economist will tell you that lower tariffs, in isolation are better for economic growth. So there's no harm in exploring that to some degree. I think the other angle, of course, we take is, as this process carries on, to what extent, is there an opportunity in markets? Let's not forget that Indian equities specifically have already priced in our view, quite a bit of that concern, if you look at the changes in earnings expectations. So I'm not sure we sort of have an immediate settlement sort of in front of us. Clearly, lots of levers and a position to take. From a U.S. perspective, clearly, we can see where the priorities are in terms of where tariff pressures are coming in. Initially, it's much more in the immediate neighbors, much more, directed towards China, as we've heard from past rhetoric. So I guess that sort of, in relative terms, at least means, the tension may not be, or the pressure may not be quite as extreme. And that's, from a market perspective, why we hold a little bit more optimism to say, while we're all worried about it today, and look, this may not be an easy settlement to get to. If I take a narrow market view, arguably, this is to some degree at least, in the price.
Okay, and maybe another way to look at it, among all of our concerns, this is not top of list. We have bigger fish to fry, more things to worry about from an Indian market perspective. Maybe that is one perspective as well. Abhay, what can India do, and how crucial is it that even optically India is weathering this storm? Because he keeps talking about India. It's not that he doesn't. In every speech, we played that out as well. He keeps mentioning Indian tariffs as an example. It's not as if it's the biggest trading partner for the US either.
No, we are not, and even whatever we do, what we export to US is very different from what we import from US. I mean, we are importing stuff that is advanced technology, defense, electronics, consumer electronics. What we're exporting is textiles, low value added items. So there is a disparity anyways. I don't think we are a threatening partner at all to the US. So that is a good thing. But I think, again, as I said, Tamanna, onus is on us now. I would like to see our companies announce that they are going to use this opportunity to actually set up manufacturing operations in the US, which is highly possible. I mean, this whole conversation of onshore versus offshore and doing it cheaper onshore, I think that is what is going to change for a long period of time. I will not be surprised to see Indian companies, pharma companies, for instance, saying that they are setting up or acquiring captive manufacturing operations in the US to cater to the US business, partly exports from India, partly made in US. And I think that is what Trump is frankly angling for from everybody. He would want the Chinese companies to come in US and manufacture. And that is what we also did, Tamanna. Like, for Samsung, Google, Apple, under the PLI scheme, we told them that, look, Indian market is open for you to come in and sell, but you make it in India. And I think that experiment has worked out well. So probably it is a replication of that in the US also, that if the global companies want to sell in the US, they better have manufacturing presence in US, and they should have job creation in the US, and not just see US as a consumption market where they are making high margins. So I think that is what is going to play out over the next 6 months.
So from the Indian perspective and the equity perspective, which are the kinds of companies that will be impacted most negatively and maybe positively as well, Abhay, with the current situation?
Yeah, I don't, frankly, if I just look beyond this, I don't think there is going to be a big degree of change for any companies. I think the opportunity clearly exists for our pharma companies right now, to not only just have factories in India that are US FDA compliant and selling to US markets, but also use this as an opportunity to be more proactive, look at some acquisition opportunities. So pharma is a space that I would expect to benefit from this and be pushed into action rather than maintaining the status quo. On the negative side, frankly, other than some textile companies that are already coming under pressure because of the tariff, I think the textile, garment, and the companies that export to chains like Home Depot and Target and Lowe's and Walmart, I think they are the ones that will get negatively impacted. But I think if you look at it, the opportunity space for Indian companies to actually get going and do something and use this as an opportunity is far more right now than the negative part of tariffs.
Yeah, but the immediate pain point is being seen. Manpreet, just your take on which bucket of companies will do relatively well?
So actually, one of our preferences is in India and elsewhere to focus on more domestically oriented sectors, because if you're trying to avoid any unexpected volatility from tariffs, that's an obvious first place to look. So if I look through our preferred sectors in India, I mean, financials is perhaps one good example of that, right? Where the drivers are much more domestic growth and credit quality driven, domestic yield curve driven. And it's more a function of that rather than being in the immediate line of fire, which some other more trade-oriented sectors might be. And it's a similar approach we've taken across US and China markets, where domestic markets in China or small caps in the US tend to have a much larger share exposure to the domestic economy. In India, preference is still though towards the large caps. I think small and mid caps face a different set of challenges, but it's really trying to keep that domestic lens until some of the storm blows over on the tariff side. I think that's the way we sort of address tariffs, the tariff risk in front of us.
Okay, so a lot of it up in the air right now. No one quite knows where things will settle as far as tariffs are concerned. But even as you're hearing all of this and wondering what it means for India, relatively will be safe. We don't actually have that huge quantum of trade from the US. Reciprocal tariffs may hit in the end of the day US consumers more. For example, if we're exporting pharma, it's them who are going to have to pay higher prices for drugs. Having said that, I want to thank all of you for joining us on the show today, and tell our viewers to comment on the topic that we've spoken about. Tell us what you think, and we'll be back same place, same time tomorrow for more on The Big Question.